Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today, we are taking a closer look at an interesting comparison between the economies of Vietnam and Iraq, and what that comparison may tell us about the Iraqi dinar, the ongoing banking reforms inside Iraq, and the broader process of financial modernization. While comparisons between different countries can sometimes be helpful, they must always be viewed carefully, because every economy operates under unique conditions. Understanding these differences can help Iraqi dinar followers develop a more realistic picture of the country's economic direction, rather than relying on speculation or exaggerated expectations. One of the most interesting discussions in international finance is why certain countries choose to manage their currencies instead of allowing them to appreciate freely. At first glance, many people assume that a stronger economy should automatically result in a stronger currency. However, in practice, central banks and governments often pursue much more complex objectives than simply maximizing the exchange rate of their national currency. Vietnam provides an excellent example of this principle. Over the past several decades, Vietnam has transformed itself into one of Asia's fastest-growing manufacturing economies. The country has become an important production hub for electronics, textiles, furniture, machinery, and many other exported goods. Global companies have invested heavily in Vietnam because of its competitive labor force, improving infrastructure, and expanding industrial capacity. Despite this impressive economic progress, Vietnam has not pursued a policy of allowing its currency to appreciate dramatically. Instead, the government and the State Bank of Vietnam have generally maintained careful management of the Vietnamese dong. This approach supports export competitiveness by helping Vietnamese products remain attractively priced in international markets. A rapidly appreciating currency could make exports more expensive, potentially reducing demand from overseas buyers. This demonstrates an important economic principle that many investors often overlook. A country's currency policy is not determined solely by economic growth. Instead, policymakers evaluate inflation, employment, exports, investment flows, financial stability, foreign exchange reserves, and long-term development goals. Exchange rate policy becomes one tool among many used to support the broader economy. When comparing Vietnam with Iraq, it becomes clear that although both countries have managed exchange rate systems, the reasons behind those policies differ significantly. Vietnam's economy is largely driven by manufacturing exports. Iraq's economy, on the other hand, continues to rely heavily on oil revenues. This distinction has major implications for monetary policy, fiscal planning, and currency management. Oil exports account for the overwhelming majority of Iraq's foreign currency earnings. Because oil is priced internationally in US dollars, fluctuations in global energy markets directly influence Iraq's government revenues. During periods of high oil prices, government income generally improves. During periods of lower oil prices, fiscal pressures can increase significantly. This dependence creates challenges that are quite different from those faced by export-oriented manufacturing economies like Vietnam. As a result, the Central Bank of Iraq operates within a unique economic environment. Maintaining monetary stability requires balancing multiple priorities simultaneously. The bank must help control inflation, preserve confidence in the banking system, support foreign currency reserves, facilitate international trade, and coordinate with broader economic reform efforts taking place across government institutions. The news paragraph suggests that the Central Bank of Iraq continues to maintain the value of the Iraqi dinar at current policy levels, while broader banking reforms continue. Whether one agrees entirely with that characterization or not, it is true that Iraq has spent years working on modernizing its financial sector. These reforms are aimed at creating a stronger, more transparent, and more internationally connected banking system. For Iraqi dinar followers, this is an important point because discussions about exchange rates often attract the most attention, while banking reform receives far less public focus. Yet in many respects, the banking system itself forms the foundation upon which any future monetary developments must rest. A modern financial system depends on much more than simply assigning a value to a currency. Banks must be capable of processing international payments securely, complying with global anti-money laundering standards, meeting capital adequacy requirements, implementing effective risk management systems, and maintaining strong regulatory oversight. Without these foundational elements, a banking system may struggle to support increased international financial activity, regardless of the official exchange rate. One reason policymakers frequently emphasize financial reform is because international confidence develops gradually. Foreign investors, multinational corporations, correspondent banks, and international financial institutions generally evaluate the strength of an entire financial system, rather than focusing only on exchange rate movements. When businesses consider investing in a country, they want confidence that banking transactions can be completed efficiently. They expect payment systems to function reliably, international transfers to be processed quickly, and financial regulations to meet internationally recognized standards. This brings us to another important observations mentioned in today's discussion. The idea that Iraqi banks are still expanding their connectivity with major international financial centers, such as Hong Kong, London, and New York. International banking is built upon extensive networks of correspondent banking relationships. These relationships allow banks in different countries to communicate, clear transactions, settle payments, finance trade, and provide services across borders. Developing these relationships often requires years of regulatory improvements, technological investment, compliance upgrades, and trust building among financial institutions. Therefore, when discussions focus on Iraq improving its banking connections internationally, they are highlighting an area that extends well beyond exchange rates alone. Better connectivity can facilitate international commerce, encourage investment, improve payment efficiency, and strengthen Iraq's integration into the global financial system. For Iraqi businesses, stronger international banking relationships could simplify importing equipment, purchasing raw materials, financing projects, and conducting cross-border transactions. For foreign investors, efficient banking infrastructure reduces operational risk and increases confidence when entering new markets. This is why many economists argue that banking reform and economic reform often progress together. As financial institutions become stronger, they can better support private sector growth, entrepreneurship, infrastructure development, and long-term economic diversification. Diversification remains one of Iraq's most significant economic objectives. While oil continues to generate substantial government revenue, policymakers have repeatedly expressed interest in expanding sectors such as agriculture, manufacturing, tourism, transportation, logistics, renewable energy, telecommunications, and digital services. A more diversified economy generally becomes more resilient because it relies on multiple sources of income rather than depending overwhelmingly on one commodity. This diversification can also improve employment opportunities, encourage innovation, and reduce vulnerability to swings in global oil prices. The banking sector plays an essential role in achieving these goals. Banks provide loans to businesses, finance infrastructure projects, facilitate trade, manage savings, and allocate capital throughout the economy. As banking reforms continue, these functions can become more efficient and contribute to sustainable economic development. Another aspect worth considering is the relationship between monetary stability and investor confidence. Central banks often prefer gradual, carefully managed policy adjustments rather than sudden changes that could create uncertainty. Financial markets generally value predictability because businesses and investors can make longer-term plans when policy remains stable. This does not necessarily imply that exchange rate policies never evolve. Rather, policymakers typically seek to ensure that any future adjustments occur within a broader framework of financial stability, institutional strength, and economic preparedness. For Iraqi dinar followers, this means that discussions surrounding currency developments should be viewed within the context of the overall reform process, rather than as isolated events. Economic reforms rarely occur overnight. Instead, they often involve multiple stages that include legal reforms, regulatory modernization, banking upgrades, technological improvements, payment system enhancements, private sector development, and institutional capacity building. Each of these components supports the others. Stronger banking systems encourage investment. Greater investment promotes economic growth. Economic growth increases government revenues. Higher revenues create opportunities for additional infrastructure spending and reform initiatives. Over time, these interconnected improvements can strengthen the overall economy. Another important issue relates to international compliance standards. Financial institutions worldwide increasingly operate under rigorous anti-money laundering and counter-terrorism financing regulations. Banks seeking stronger international relationships must demonstrate compliance with these standards through effective monitoring systems, reporting procedures, customer verification processes, and regulatory oversight. Improving compliance enhances both domestic financial integrity and international credibility. It also reduces risks associated with cross-border financial activity and encourages greater participation from global financial institutions. Technology is another major component of banking modernization. Around the world, financial institutions continue investing in digital banking platforms, cybersecurity, electronic payments, mobile banking services, artificial intelligence applications, and advanced payment infrastructure. As Iraqi banks modernize technologically, they can improve customer service, increase operational efficiency, reduce transaction costs, and expand financial inclusion for individuals and businesses alike. Financial inclusion itself represents another important objective. When more citizens have access to banking services, savings accounts, electronic payments, and credit facilities, economic activity often becomes more dynamic. Businesses gain better access to financing, consumers enjoy greater financial flexibility, and governments can improve transparency within the financial system. Looking at Iraq's broader reform efforts, observers frequently discuss initiatives aimed at reducing reliance on cash transactions while expanding electronic payment systems. Digital payments can improve efficiency, strengthen transparency, reduce transaction risks, and support broader economic modernization. These developments may not generate dramatic headlines like exchange rate speculation, but they often represent meaningful progress within a country's financial infrastructure. It is also useful to understand why central banks sometimes prioritize stability over rapid appreciation. Exchange rate movements can influence inflation, import prices, export competitiveness, government budgeting, and overall economic confidence. If changes occur too rapidly without sufficient preparation, businesses may struggle to adjust, financial markets may become more volatile, and consumers could face increased uncertainty. Consequently, many central banks prefer gradual approaches that allow markets and institutions to adapt over time. This philosophy is not unique to Iraq. Numerous countries around the world carefully manage exchange rates according to their own economic priorities. For Iraqi policymakers, balancing monetary stability with ongoing reform efforts requires continuous assessment of domestic economic conditions as well as international developments. Global oil prices, geopolitical events, inflation trends, interest rates in major economies, international trade conditions, and regional financial stability all influence policy decisions. As global economic conditions evolve, central banks frequently review their strategies while remaining focused on maintaining stability. It is equally important for Iraqi dinar followers to distinguish between confirmed policy announcements and market speculation. Financial markets often generate rumors regarding exchange rates, reform timelines, or monetary policy. Responsible analysis requires separating verified information from unconfirmed claims. Official statements from recognized government institutions, central banks, and reputable international organizations generally provide the most reliable basis for understanding economic developments. That approach helps reduce misinformation while encouraging informed discussion based upon publicly available evidence. Looking ahead, the short-term outlook for Iraq's financial sector will likely continue emphasizing banking modernization, regulatory improvements, payment system development, compliance enhancements, and efforts to strengthen confidence in financial institutions. Progress in these areas may not always produce immediate visible changes for currency observers, but they can contribute to building a stronger institutional foundation over time. From a longer-term perspective, continued economic diversification remains one of Iraq's most important strategic objectives. Expanding industries beyond oil can create additional employment opportunities, broaden government revenues, encourage private investment, and strengthen economic resilience against commodity price fluctuations. Achieving these goals will require coordinated efforts involving fiscal policy, monetary policy, education, infrastructure, legal reforms, private sector development, and international cooperation. The banking sector will continue playing a central role throughout that process, because modern economies depend heavily upon efficient financial intermediation. For followers of the Iraqi dinar, today's comparison between Vietnam and Iraq serves as a reminder that currency values cannot be evaluated in isolation. Exchange rate policy reflects broader economic priorities, institutional development, financial stability considerations, and long-term national strategies. Vietnam's managed currency policy supports its manufacturing export model. Iraq's monetary policies operate within a different economic structure, shaped by oil revenues, financial reforms, and efforts to strengthen banking institutions. Although both countries manage their currencies, the underlying policy objectives are not identical. Understanding these distinctions provides valuable context when evaluating discussions about monetary policy or banking reforms. Ultimately, the long-term strength of any currency depends upon the health of the underlying economy, the credibility of financial institutions, investor confidence, regulatory quality, productivity growth, and the ability of businesses to compete successfully within global markets. These are complex processes that develop over years rather than days. As Iraq continues implementing banking reforms and expanding engagement with international financial systems, observers will likely continue monitoring developments related to financial infrastructure, regulatory modernization, digital banking, investment climate improvements, and economic diversification. Each reform represents another step towards strengthening the country's financial architecture, even if progress appears gradual from the outside. Patience and careful analysis remain valuable qualities for anyone following economic developments. Rather than focusing exclusively on short-term speculation, examining the broader direction of institutional reform provides a more balanced understanding of Iraq's evolving financial landscape. As always, responsible analysis recognizes both opportunities and challenges, while avoiding exaggerated conclusions that extend beyond available evidence. Thank you for watching today's Iraqi dinar news update. If you appreciate balanced, factual, and responsible coverage of Iraq's economy and the Iraqi dinar, be sure to subscribe to the channel and like the video so you never miss future updates. This content is provided for informational and educational purposes only. It should not be considered financial, investment, or trading advice, and viewers should always conduct their own research and consult qualified financial professionals before making any investment decisions.